Remember, it's not uncommon for gold to push lower when US equities are falling hard. Alright guys, the reaction and price action across major asset classes remains messy to say the least. I mean, looking at markets, we've seen a lot of chop as they react to this ongoing geopolitical situation in the Middle East. Over in equities, I mean, global stocks were hit bad once again yesterday, led lower by Europe. The Euro Stoxx 50 dropped more than 3%, and that makes a lot of sense when you think about it, as Europe is a major energy importer, so higher oil and gas prices isn't a great look for their economy. Over in the US, the sell-off was sharper earlier on in the session, but just like Monday, moderated towards the end of the session. However, major US benchmarks still finished in the red, with the VIX jumping to its highest levels since November. The fact that US equities repeatedly claw back losses, though, tells you this isn't full panic mode. It's not disorderly. It's just people reducing risk, most likely volatility-linked funds that have to dump when volatility gets spicy. Now, quickly looking over Asia, they're also feeling the pain, with South Korea taking the biggest hit as the Kospi plunged 7% on the day. Now, that's the pain trade for oil importing countries. When energy prices spike, it feeds into the economic expectations. It's also why we've seen the Nikkei drop 10% from all-time highs in just about 4 days. Now, over in FX, the dollar has held on to its gains as the haven of choice. The dollar index is up about 0.5%, pushing towards that multi-month highs as the euro slid towards 116. Again, the logic is straightforward, with risk of liquidity flowing into the dollar while the euro is vulnerable to higher energy prices. Now, we also had some GDP data for Australia, but with the current risk sentiment in play, and of course the fact that a lot of good news has already been priced in for the Aussie dollar, the better data hasn't been able to lift the Aussie dollar in the session so far. Now, quickly looking over to commodities, oil is of course the main driver and focus, with much of the price action revolving around the up and downward swings we've seen in WTI. Now, we saw another spike higher in oil yesterday as the conflict raised fresh fears over shipping and supply. The Strait of Hormuz remains the focal point because it's a critical choke point for global crude as well as LNG. Now, even though there is news about potentially escorting tankers through the strait, providing some insurance guarantees, markets are trading this headline to headline because, again, nobody knows how long this disruption will last. Now, once again, one market that surprised many traders yesterday was gold, which dumped alongside equities yesterday before clawing back some of the losses. Now, we've said this many times before. When the brown stuff hits the fan in equities, gold usually trades positively correlated to equities. That means on very big red days for US equities, it's not uncommon for gold to push lower alongside it. That's very important to always keep in mind. Now, looking at the day ahead, of course, the path of oil will remain in focus with the ongoing developments in the Middle East. On the data side, we do have US ADP employment data coming up, as well as ISM services PMI a little bit later in the session. That is something worth keeping on the radar. Happy trading.